Hello, my friends. Jeff, Tax Rescue CPA. So what are the changes President Trump has talked about making for U.S. taxpayers? And I'm going to focus on individuals in this video, and I'm going to give you 10 of the changes that seem to be the most relevant to folks like you and me. All right, let's jump in and talk about what may be coming. So number one is to make the individual tax cuts permanent. These are the ones that happened in the 2017 Tax Cuts and Jobs Act. This was a huge change back in President Trump's first administration, but it wasn't made permanent. These are set to expire in 2025. So the change would be to make these permanent. And we're going to talk about some of those individuals here as part of our 10 list. So number two is to eliminate income tax on Social Security benefits. This is huge. Because right now, Social Security benefits are taxed up to 85% of Social Security benefits are taxable to individuals. And this is based on how much other income you have. So this change would remove that taxability of Social Security benefits at the federal level. And I say federal level because a lot of states already don't tax Social Security benefits. Now, who's this going to benefit? It's not going to benefit low-income Social Security benefit recipients because they don't have other income that is making their Social Security taxable. This is going to benefit middle to higher income Social Security benefit recipients. All right, number three is to remove income tax on overtime pay. This one's huge, unique, different, something we haven't had before. Basically, this is for employees who earn overtime. Now this, keep in mind, right, when I say that, this eliminates a whole group of people that are salaried and exempt from overtime. Okay, so let's talk about those that do receive overtime. Overtime earning employees, that overtime pay wouldn't be taxable. This would be huge because a lot of times you'll hear people that talk about getting paid overtime, but the taxes come out of it at so great of an amount on their paycheck that they don't feel like they're really getting any benefit. This would change all that. All right, number four is to remove the taxability of tip income. Let's think waiters and waitresses, okay? Their primary their vast majority of their income is tip income. They don't usually get paid a whole lot per hour. That income would now become tax-free with this change. Now, let's be honest, a lot of folks don't report their tips anyway. So this is another way to basically eliminate tax cheats because you wouldn't be cheating on your taxes anymore to not report tips because they aren't taxable. Double bonus. All right, number five, repeal the SALT deduction cap. Okay, what's SALT? State and local income tax. Right now, if you itemize your deductions on your federal income tax, there is a limit of $10,000. Again, I say federal because some states don't have this limit. They haven't incorporated this limit, so it's just on the federal side. There's a limit of $10,000 that you can deduct for state and local taxes. This change would eliminate that. It would push a lot of people to be able to itemize their deductions that are currently using the standard deduction. So this would be a big change for a lot of folks in that middle income area. Okay, number six. This one's new, is to make auto loan interest deductible. Again, this is part of the itemized deductions that happen on your federal income tax. And honestly, going back to the 2007 Tax Cuts and Jobs Act, when the standard deduction got increased, or was increased, it eliminated itemized deduction or doing item deduction for a lot of people. But this would put more that's available to be deducted, and it might make itemizing more beneficial to a lot more taxpayers. All right, number seven is to increase the standard deduction. This is a big number on most folks' tax return, and it has a huge effect on the taxable income, the amount of taxable income they have. So changing this number has a broad effect with U.S. taxpayers. This has a huge benefit to a lot of people at different levels. Okay, and number eight is enhancing, which I would say means increasing the child tax credit. So now we're focusing on folks that have children. Currently, it's at $2,000 tax credit. Some of it's refundable, and that's for children under 17. So the idea is to raise this amount from $2,000 to something greater. All right, number nine is to reduce capital gains taxes. This is part of making the TCJA Act, or TCJA, which is Tax Cuts and Jobs Act, permanent. That bill from 2017 had a lot of reductions, or it had major reductions to capital gain taxes. All right, and number 10, it's kind of curious, doesn't affect a large percentage of Americans, but Trump's talked about changing the taxability for non-resident U.S. citizens. So currently, if you are a U.S. citizen and you live in another country, you're not a resident of the U.S., but you're a U.S. citizen, you have to report your income and maybe pay taxes on some of it or all of it or some calculation in the U.S. Trump is saying, no, if you're a resident of France, we're not going to require you to report your income on a U.S. tax return. You would report it in France, whatever their tax code is, and it would be based on your residency, not on your citizenship. So there you have 10 of the big changes that Trump is talking about making. There's been, these have various levels of whether they're actually going to happen or not, but this is what's out there and being discussed. Be aware of it and keep watching the news to see which one of these hits, which one is made permanent, which one was put into effect, and know how that's going to affect your taxes in years to come. All right, Jeff here signing out. Who's doing your taxes?